Hello, guys. Good morning. Thank you for joining us on our morning market review. Apologies for starting really late, but we're going to make it up. My name is Emmanuel. This is our morning market review, guys. Thank you for staying to for waiting up to this time. So we do this every trading day, Monday through Friday. It's actually one solid hour of market analysis. Okay. So the market is just beginning. This is eight. This is past eight. So let's just dive in. Let's start from fundamental analysis. Then after fundamental analysis, we'll now do technical analysis. So let's do a little sound check, guys. Sound check, sound check. Let me know if you can hear me. Get to the chat room, please. Can you guys hear me? Get to the chat room, please. Thank you. So let me share my screen real quick so that we can do some fundamentals here. So the website we are using for our fundamentals is forexfactory.com. So I'll go straight to Forex Factory right now. Let's see the news event that can have impact on the market for today, okay? So forexfactory.com on your browser, forexfactory.com. That will be easy, right? Forexfactory.com. So I am there right now. So let me share my screen right now. So guys, just a moment. So I've been able to share my screen. Can you see forexfactory.com? Now, actually, there are several websites you can use for checking for fundamental events, right, that can affect the market. So there are other websites, but we are using this Forex Factory for today, okay? So today being 4th, as you can see, I've zoomed in. This is 4th, Thursday, the 4th December, right? Okay, this month is actually the last month of the year, okay? So I hope trading has been awesome for you, right? I hope trading has been good, right? So whenever you trade, sometimes it's not all good, right? Because sometimes your trade gets to eat, your trade hits stop loss, sometimes you hit take profit, okay? But just make sure that you're not taking bigger losses that are far bigger than the profit that you're making. Otherwise, you can tell the end from the beginning, okay? So you don't trade like that. So you take small losses, you trade with stop losses, and of course, you allow the profit to run, okay? Allow the profit to run. So you're in a profitable trade as profitable as maybe 30,000 naira. So you can allow it to run, right? Mm. So you can get up to 60,000 naira. So a trade that you're supposed to make bigger profit, you end up going out with small profits. Or let's say you're in a profit of 100,000 naira, you can allow it to run. That profit can get to 650. I'm telling you. So you allow your profits to run. So that is how you end up making bigger profits, okay? Bigger profit, take care of the stop losses in the bad days. So that's what we call trading success. So guys, for today being Thursday, as you can see, uh, okay, for this morning we don't have any high impact news, right? There are no high impact news. Okay, so this is the impact. The impact is the volatility. Okay, so our attention is actually on the volatility. So for today afternoon by 2:30 p.m., right? We have excuse me, we have unemployment claims, right? Unemployment claims just exactly when the US markets will be opening. So unemployment claims. So that's on the dollar, right? On the dollar. So unemployment claims. So that's just the high impact news we have for today. So now, of course, these are individuals, right? Citizens in the US filing for unemployment benefits. So it tells you, gives you an idea about the unemployment rate in the US, right? So those filing for unemployment benefits, in the long story cut short, simply means they are unemployed, right? They are unemployed. So it tells you what the economy is doing, how the how the policies of the government is having impact on its citizens, whether they're employed or they're not employed. And of course, the higher the number of unemployment rate, it means the economy is not doing well because there are no money in the pockets of, in the hands of citizens, right? And of course, that also will affect the inflation, right? And in other words, to affect the gross domestic product of that particular country. So you can use this unemployment rate to know whether the dollar will be stronger or the dollar will be weaker. Okay. So a higher unemployment rate simply means the dollar will be weaker. A lower unemployment rate simply means dollar will be stronger. And of course, this is where you see the value. So this unemployment claims is actually a data news. So it's a data news. Data news meaning that whenever it's released, you will see numbers. So it comes with numbers, right? It comes with numbers. So the numbers are actually the forecast, the previous, and the actual, as you can see. So we already have the previous 216. It is forecasted to be 219. This case actually thousand. So 219,000. 219,000. So 219,000 people, right? That's what it means. And of course, the actual is not yet released, right? So it is when the actual is released, that is when we get to know and say and know, okay, fine. Please, if you have questions as we are just going on, you can get to the comment section and drop your questions, okay? So when the actual is released, that is when we can get to know whether the currency value will either appreciate or depreciate. So whichever direction you want to trade USD pair, right? Either new USD numerated currency pair or USD denominated currency pair, or you want to trade gold, or you want to trade US 100, or you want to trade the stock index. Any of them you want to trade, they are all related to currency. So whenever this value is released, of course, by 230. So guys, stay close, keep close to your system, uh, to your trading platform, because by 1:30, by 2:30 rather, by 2:30 p.m., guys, I think we will be expecting enough movement. So there are times of the day that the market moves very well. Usually during the US session in the afternoon, right? In the afternoon. So most times when we have this analysis in the morning like this, London session, and the market is not moving crazily, okay, just wait. The volatility that you're expecting is coming. Is coming. Mm. The volatility they come. So guys, so what will be the result? So it depends on so we have to wait till that time, right? We have to wait till that time. So if the actual comes out greater than the forecast, it simply means more unemployment, uh, more people are filing for unemployment benefits, right? So which means it will be bad for the dollar. Okay, so it's just the opposite. So guys, I think that's just the high impact news we have for today. Let me switch over to my chart. Let's do some technical analysis, guys. So let's start from Euro USD. So guys, let me switch over my screen right now. So guys, I've been able to share my screen right now. Please check whether you can see my screen. Get to the comment section. Tell me whether you can see my screen. Thank you very much. Okay, thank you very much, Yemi. I can see you there. You can see my screen. Beautiful, beautiful. Thank you, Carlo. So this is my screen right here, my chart. So let's look at what we have here. I can see all of your responses. Okay, so guys, let's start from Euro USD. Euro USD. So as we analyze Euro USD, analyze other currency pair, then of course we get to pick our trade, right? Put our stop loss, put our take profit, because that is how trading is done, guys. That is how trading is done. So trading is done in such a way that you analyze, and of course, you pick a direction, right? If you don't have a direction, then you stay out of that particular trade. I mean, stay out of that particular instrument. Don't trade it. Don't trade it. So if there's no direction on Euro USD, you leave it alone. You get to GP USD and check for direction. If there's no direction, you leave it alone. You get to NZD USD. So whenever you analyze the market, you get to you are expecting three things, right? Three things. So you are either looking out for a buy signal, a sell signal, or guys, there is something called waiting signal. Waiting signal, or you wait, that means there is no direction yet. You wait. So what are you waiting for? You're waiting for the direction to appear, right? You're waiting for the direction to appear. So guys, you analyze, right? You either get a buy signal or a sell signal. So one of the ways we analyze the market is to talk about the structures of the market. So guys, are we still together? Are we following? So one of the ways to analyze the market is to talk about the structure of the market. So the structures are actually what you're seeing, right? Majorly the highs and the lows of the market, right? So how the market is successfully creating new highs, right? Or trading higher, or how the market is successfully creating new lows, or if you like, trading lower. So the time frame that is best to start that particular kind of market structure for most of us day traders, right? A little bit of handful of swing traders is to search for the H4 time frame. Guys, are we still together? Okay, so start from the H4 time. So from the H4 time frame, we can see that okay, let me remove most of these arrows we have. So we can see that the instrument is Euro USD instrument is very much bullish, right? So this is bullish. Remember market structure and analysis. So if you look at this arrow right here, we said the market was going down. Right here now it's now going up. Okay, okay. All right, so this is an upward trend, upward trend, upward trend. Why? Because the market keeps smashing the highs and forming new highs. So the market took out this high to form a new high. The market equally took out this other high, took out this high to form a new high. And of course, the market actually traded above this high. So when I say took out, I mean it traded above. It traded above it. So trading above it is a strong sign of momentum. It's called momentum gain. So momentum gain in a particular direction equals a trade signal in that direction, right? So momentum gain in a particular direction equals a trade signal in that direction. Now let's be specific. Momentum gain in the upward direction equals a buy signal. So momentum gain. So what we are seeing right here is momentum gain. So buy signal, right? But don't forget, if the market is trading upward, so one of the challenge of traders is that if trading upward, you can still sell and make profit. So they are not confused. So doesn't mean if I buy or sell, I can make profit at any time. Okay, you should understand when you're buying, you should understand when to buy and when to sell. So if you sell on the retracement on an upward day, you still make money, sir. So that is one of the challenges, right? So if that is equally your challenge in trading, get to the comment section, let me know, right? Say, Emmanuel, why is it that even on an upward trend, he says upward trend, but I'm selling and I'm making money. And that is why I don't like to be following this upward trend and downward trend. Any direction I trade, I can still make money. So get to the comment section, let me know if you have encountered or you're having that same challenge, right? So you said it's upward trend, but we are selling and making money. I'm waiting for you guys. So except you're saying you don't have that challenge, eh? The market is up now. This kind of analysis, right? You can replicate it, you can copy and paste in any instrument of your choice. And of course, so when we analyze like this, it is the same thing across all the tradable instruments, right? The same thing across all the tradable instruments. It simply means if you pick this pattern of analysis and replicate it, and of course, and across instrument like gold, instrument like silver, instrument like oil, instrument like USD card, any of the instrument of your choice, guys, you will get the same kind of result. So let me look at the comment section for those that have responded. Oyedele, okay, let me just call you Dele, right? Dele, you said it's a challenge, bro. So I'm waiting for more comments, right? You say it's upward trend, but I am selling, or you say it's downward trend and I'm buying. It is well. So actually is because, guys, let's keep this very engaging. Okay, I asked for some comments. Okay, get to the comment section and let me know if you have that same challenge. Okay, so it simply means you have to identify the parent trend first. Mr. Dele, please listen. You have to identify the current trend first, right? And identifying it has to be done on a higher time frame, right? So you get the perspective view, right? Or if you like the overall movement of the markets. So this is H4 time frame. This is the overall movement, right? So it's clearly spelled out with these arrows pointing up and pointing down. So we can call this leg. So if you watch, the movement upward is usually bigger than the movement downward, right? The movement upward is bigger than the movement downward. It's like your income supposed to be bigger than your expenses. Your income supposed to be bigger than your expenses. Then you're making then you're in a good position. So whenever your income is always bigger than your expenses, you're in a good position, right? But if in a month your expenses are far bigger than your income, then you're in a bad position. So in the same way, if you watch the upward leg, I want to call impulse is always bigger. It's always bigger. So if that is always bigger, then it simply means the trend is upward, right? However, whenever there is a break of structure, you can look forward to start taking trade in the opposite direction, right? Because you can scalp the market. However, scalping the market becomes a high risk trade. So let me do something here. Let me change the color of this arrow so that you understand them very well. I think let me use which color now? We green. Okay, let's use a green color. red color. Okay. So you can see the red arrows are actually what we call retracement, right? The red arrows are actually what we call retracement. So that is where if you sell, you make profits now. But if you sell there, we call that a high risk trade because you are actually trading against the dominant trend, right? So you're actually trading against the dominant trend. So you don't trade against the dominant trend. Okay, more comments here. Beautiful. So Mr. Abdul, say you're trying to reach your account officer. Okay, beautiful. At the end of this section, I'll drop my phone number. Okay, so you can get to me, send your email address to me, then I'll reach your account officer on your behalf. Okay, so just drop your email address. I'll drop my phone number at the end of this session. Drop your email address, right, on me on WhatsApp. Just send it to me on WhatsApp, then I will reach out to your account officer. So I think the next comment here. Okay, so Mr. Phineas Elijah. Is it okay? Elisha. Say, sir, with your analysis in the screen, can you please explain how to use Fibonacci? Okay. Okay. Even though that one will take us, it will deviate us a little bit. So I have challenge on entry point. It's quite challenging, my brother. Okay. Okay. So beautiful. So Fibonacci is this one, Mr. Phineas, right? Fibonacci is this one. So if you watch, so you drag from a low, right? So this is a low. Why do I call this a low? Remember, this low was responsible for taking out these relatively equal highs, right? So some of us here will be familiar with that word, relatively equal highs, right? Okay. So from this low, you drag to this high, to the high, then you extend like this to the future. So you can see this retracement leg got to 50%, right? So 50% is half of the initial movement, right? So 50% is a good retracement. So the retracement we normally look at for is 38.2%, 50%, and of course 61.8. So these are the three strong levels where whenever the market retraces to, you are looking forward to take the trade in in the original direction, right? So after this retracement, so you can take your trade. So you can see this one retrace to 50%, which is a good retracement. So around that level, once you see that the market have done that kind of retracement, that is when you can now start looking out for opportunities to buy, right? That means opportunity to continue the trade in that direction. Okay. Then let me show you for the second leg again. So look at the second leg again. So from this leg again to this high here. So this is it, Mr. Phineas. Are you still with me? So you can see this second one, the market retraces to 61.8, right? So watch carefully. The market retraced to 61.8, right? 61.8, right? So that simply means after you must have seen this impulse to the upside, you have to wait for this retracement to come down to either 38.2, 50, or 61.8, right? So this third leg now, Mr. Phineas, are you still with me? Let me know if you're still with me, okay? So this third leg, so from here, right? So you're going to be measuring you're going to be measuring the impulse leg. So the fib will be on the impulse leg, right? If you understand what I mean, impulse leg. So the impulse leg is the movement that caused the break of structure, right? So this whole movement that led to break of structure trading above this high is what we call the impulsive leg. So let's see how much this one will retrace. So most likely this one will retrace back to somewhere around here. So this area where the market will retrace to is what we now call area of interest, right? Area of interest, area of interest. All right. So we are good on that, right? I'm sure you understand that, Mr. Phineas, right? Okay. Oh, uh, when when do you think is the right time to use FIBO? Okay. Okay. Fine question. So you can use a FIBO, Mr. I'm trying to mention your name, but it is well with me. Mr. Egbareva, right? Let me call you Ega. Sorry about that, my friend. So, but you know your question, right? So you're asking when is the right time, Mr. Phineas, I can see your comment there. Thank you very much. When is the right time to use a Fibonacci? Beautiful. So you use a Fibonacci when the market has actually broken a structure, right? When the market has broken the structure and then it has started showing some sign of retracement. Exactly right now. So what the market is showing right now is the best time. I like this your question, Mr. Let me call him Mr. E. So right now is the best time to use a retracement. So let me show you why. Why? Because the market has done what we call break of structure, right? So it has traded above this previous high to form a new high. So let me do something like this. It has traded above. Uh-oh. So right now is the best time to do a Fibonacci. So by that I mean the market have traded above this previous high. Okay, that is showing PHO. Okay, I hope you understand what it means. This is not Port Harcourt. So the market have traded above this previous high, right? So once the market have traded above a previous high, and it has now actually formed a new high. But the way you know that it has formed a new high is that it has started retracing. So this is a new high. Mr. E, are you still with me? So your question is actually spot on. When is the best time to use a Fibonacci? The market have traded above a previous high to form a new high, right? And then you have started seeing some level of retracement. Now, the only way you can say that's a high is that the market have started retracing, moving away from that level, right? So then you cannot pick your feed and draw from the low that was responsible uh, for violating this previous high or for trading above the previous high. You draw it to the high, right? Then you now have your point. Then you now go into the waiting game. You now wait for the market to drop as low as 61.8, 50, or even 38.2. So these are the three areas you'll be waiting for the market to drop to, right? So once the market drop to this level, the next thing you now look out for the reaction. The market should be able to react, right? It can react with what we call a change of character. That means the first sign that the market want to start going up, or it can give you what we call bullish engulfing. So you just look out for some sign around this area before you buy to continue. So Mr. E, I'm sure you got some value from that explanation, right? Okay, fine, fine, fine. So let's continue. Let's continue. Your questions led us to this. I'm sure you guys got some value. Okay, so without any doubt, this is upward trend, right? So we'll be looking out for opportunities to buy, right? But guess what? Since we have done break of structure, don't forget we have done break of structure, right? Since the market have done break of structure, the next movement is called extension, right? So these areas are extension, and those extensions are actually premium. Call it say premium. Oh, I wish I was in a physical class. Okay. If type premium on the comment section. Oh my God. Because in a physical class, I will get my student to say premium. So once the market have traded above the previous high and the market is still trading, I mean, still around that previous high, we call it premium. Mr. Phineas, thank you very much. Oh, Mr. Afine said premium. So who will join him to say premium? So once the market is still trading above the previous high, right, we call that premium. So at that premium level, it's not really ideal to want to buy, right? Except you want to take a high risk trade. So if you buy in the premium zone, so let me show you what I mean by premium. So let me pick a line and drop it just above this high. So, sir, I'm trying to say the market is still trading above this line. So once you see trading above this high, if you buy, we call that a high risk buy, not a low risk. Now, but if you wait for the market to retrace just a little bit inside, so if this is premium, okay. Let me even. Are we just going to analyze only Euro USD? But I'm sure you guys are getting value, right? Uh, so let me know if you're getting value, or let me know if I should just leave Euro USD and jump to the next one. So this areas is premium, so premium prices. So this area, let me say 15, right? So above this area is what we call premium. So these are premium prices, right? So buying inside this premium area is actually a high risk trade, right? So you can make profit, but you have to note. So these are discounts. So discount price. So remember, the best time or the best prices to buy is to buy the discount by price. So these are the two areas, right? So if you buy it, so that is why the Fibonacci 32.8, 38.2, 50, and 61.8, they all fall inside discounts, right? They all fall inside the discount. They all fall inside the discount. So so if you're going to take a buy trade right now, you should know that that trade is a high risk trade, right? That also will inform your choice of the kind of loss sizes you use, right? Depending on your account. So guys, I think we have done a lot on Euro USD, right? And enough for Euro USD. Mr. Didion, you're getting value. Thank you very much. Mr. Didion, so you're asking when do we normally have training sessions? Okay. So of course you can get to any of our physical. You can join us online now on the course physically, right? If you are in Lagos, you are in Abuja, you are in Ibadan, or you're in Port Harcourt, as I am in Port Harcourt, you can come to the office and get physical classes, right? But if you are in any other state, so you can join us online, right? Online Mondays and Tuesdays, 10. So the physical class is also 10, okay? And of course, at the end of this, I also drop my phone number. So it's beautiful, good to know you guys are getting value from this. So we have defined this trend to be an upward trend. Then that's number one. Then number two, if we are buying just above this previous high, we are doing a high risk buy. If we are waiting for the market to retrace into the discount area, then we are doing a low risk. Guys, just copy this thing. So you can see carefully that the 38.2, 50% retracement, and 61.8%, they all fall under where? Let me wait for your response. Sir, 38.2, 50% retracement of Fibonacci, 61.8% retracement, they all fall under premium or discount price. I'm waiting for you, sir. Mr. Finance, thank you very much. Discount, Didion, thank you very much. Discount. So you can see that those areas, okay, beautiful. I love the response this morning. Everybody just saying discount, discount. Wow, we're all in the same WhatsApp group. Okay, well, because we're all getting it. So it simply means if you want to make a good trade, right? So you should wait until it gets to your discount price. That doesn't mean you cannot buy in premium price. Buying in premium price is when you are in the spirit of taking a high risk, right? Maybe landlord don't knock for your door. You say, no, if I perish, I perish. Okay, actually, that's where you can even take it. If I perish, I perish. Uh, mm like those that play bets, that can take risks, that can do so they can buy there. So guys, you understand it, right? So let's quickly leave Euro USD, right? So we are spending a lot of time on Euro USD, but I'm sure you guys got enough value. So you can copy the same analysis or you can replicate it on other instruments carefully so that trading will not just be haphazardly. So you can see this kind of analysis is not haphazard. We will know what we want to do, want to buy, right? Because a trend is upward trend. Then, of course, if we want to buy, we are waiting for the market to give us discount, right? To give us discount. Discount are actually low prices. For the market to displace a little bit, move down a little bit to low prices. Otherwise, if we are quick to want to enter, then we can buy at the premium price. That's a high risk rate. Now, all this analysis is done on the H4 time frame. Now, guess what? Even if I switch over to a lower time frame, 15 minutes time frame, all these things are still valid, though. Hello, sir. All of these analyses are still valid. So if I switch over to a lower time frame, 15 minutes time frame, watch this or watch this. If I see a buying opportunity here, right, and I decide to buy, I already know that I am buying on a premium price. I know it's not a guesswork. I know. For example, now that I've switched in, then I am now seeing my 21 period moving average, right, swinging beautifully above my 50 period moving average. I have seen even on this lower time frame a break of structure. Come on, guys, are you guys still with me? I'm seeing a break of structure. I'm seeing momentum push to the upside. If I still go ahead and buy, I know it's not that I am just guesswork. I know that, hey, I am buying at the premium price. Therefore, the market might retrace on me. I already have all this information. So in that case, I will have to reduce my lot size such that even if the market retraces on me, it will not be too fatal. But if it goes up, why not? In profits, guys. Do you guys understand that explanation? So you should know when you are buying at the premium, know when you're buying at the discounts. So you can buy at the premium price and say, hey, you wait for the market to get to discount, right? Before you buy, okay? So, and of course, I think this is that line we do, right? So if the market is able to take out these lows, then of course the market has fallen down to discount price. So guys, it simply means so looking for an opportunity to buy on this discount price, it simply means you have to wait for kind of retracement. So even if you wait for a retracement and the market still falls back to this local support, because this area becomes a support, right? This area becomes a support. So if you wait for the market to fall back to this level before you buy, you actually buy on a premium, okay? So you put your stop loss just below this low and you take profit at that high. Otherwise, if the market goes against you and falls down to premium, falls down to discount, you can still buy again. So this is a situation where you place a first buy, the market goes against the first buy, you place a second buy. Now, guess what? Most persons do that not knowing what they are doing. But if you do it, you know what you're doing. You know that the first one is a premium price to enter. The second one is a discounted price. Otherwise, you just forget about the premium and wait for the discount. Guys, did you get some value from that? Yes. You can draw Fibonacci with your phone. Mr. Frederick. Very beautiful name. Thank you very much. So you can draw Fibonacci with your phone. So guys, I think I would run through most of the other instruments. I will not like explain this much on them, right? Because of our time, right? Because of our time. But guys, get to the comment section. Let me know if you got enough value. So if you understand this, my premium and discount market structure analysis, now type at the comment section. Type premium and discount market structure analysis. Just type it. Everybody. Get to the comment section, type premium and discount prices market structure analysis, okay? Get to the comment section. Let me know if you guys really understand. So quickly, let's do GPUSD. So on GPUSD, no much explanation now. I'll just run through it then. So any other instrument you want us to analyze, just drop it at the comment section. Remember, this is our morning market review. We do this every trading day, Monday through Friday, once only hour of market analysis. We give you tips and tricks on how to navigate the market. Of course, previews, reviews, what the market will do, what the market have done. So guys, all of these things will bombard you so that you can be able okay. I like your abbreviation. Premium and discount market structure analysis. Premium and discount market structure analysis. Premium and discount. Beautiful. I like the way all of us, we are coming from the same WhatsApp group. We're all typing the same thing. Premium and discount market structure. You understand it. So you can now copy this now and go and replicate and paste in other instruments. Just open any market structure, any chart of your choice. Then make sure you're on 4 hours time frame. Now do this kind of analysis, premium and discount market structure analysis. Get to know your discounted prices, your premium prices, where you will buy, where you will sell, your high risk buy, your low risk buy, your high risk sell, your low risk sell. So guys, and of course, as you're doing this, if you have questions, guys, this is my phone number 0902626 09026264507, and my name is Emmanuel. May the market be with you guys. So let's continue. The market is still with you guys, right? Let's continue. So on GPUSD, guys, on the H4 time frame, guys. So if we are doing our premium our premium discount market structure analysis, guys, of course you understand it right now, right? Of course. So we can see that the market broke this high, right? So I'll not do too much explanation because so that I will not stay too long on this one. So this is an upward trend, right? This is an upward trend. So where is the market right now? So who can tell us where is this market? Is this market on a premium price or on a discounted price? So who can help us? Where is this market? Is this market actually trading premium or discount? Is the market trading premium or discount right now? So if we buy, are we buying at the premium price or we are buying at the discounted price? Because this is obviously an upward trend. So premium, everybody saying premium, 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 beautiful. So premium prices are high prices, right? So you just imagine you enter a showroom, right? Let's say a Tamoku showroom and you want to buy a side-by-side fridge, right? And the side-by-side fridge, they are giving you a premium price of 3 million naira, right? Or let's say 3.5 million naira for a side-by-side fridge. You know, this rebranded Tamoku called Haya, right? With a glass door. You can stand in front of the fridge. The fridge is almost your height, like with a glass. You can see yourself on the fridge side by side, and they are telling you that the price is at a premium of 3.5 million naira. Now, not everybody would like to buy because that price is high. That price is high. So it's mean premium prices are not priced for everybody, right? They're not priced for everybody. They are priced for some selected few. So in the same thing, if you're buying at this high point, even though you switch over to a much lower time frame, you're actually buying at a price for some selected few. It even means that's a high risk trade. Okay, that's a high risk trade. Okay, I'll rush very fast, or otherwise, if the market breaks any known level of support, and of course, it's during the US section where we have a lot of movements, right? I mean, the volatility is high, then you can go for a sell because this market will need to retrace. So we're expecting a good retracement on this instrument, right? Remember, it has to retrace, it has to retrace, it has to retrace, right? So these are inputs to the upside, right? So it has to balance the buy side, right? So guys, let's look at other instruments. So let me know the instrument you want us to analyze. Okay, Mr. E again. You say you're currently on a sell. Okay, you say we should do gold, but you say okay, Mr. E, you're currently on a sell on GBP JPY. Okay, let's look at it. So Mr. E is selling GBP JPY, GBP. So Mr. E, you are selling JPY. Let's look at it together. Oh goodness. So this is GPJPY selling G. Okay, beautiful, beautiful, beautiful. I like that because of this big push to the downside, right? So if you're selling this, so I think it's time for you to now adjust. You're already on a profit, right? So others can still jump in, right? On the sell on GPJPY. I like that. So you can now adjust your stop loss, right? Take your stop loss. So normally if you're selling like this, so you adjust your stop loss, take it from the risk zone. So this is where your stop loss would be, right? So let's say if you're selling something like this somewhere here, you said selling for somewhere here. So and then and of course your take profit is down here. So you can adjust your stop loss, right? Take it from the risk zone to the profit zone to protect some of the profit because this is actually a spike, right? So this is a spike. So you take it. So this is the stop loss. So this other line is the stop loss. So this other one is stop loss. You take from the risk zone, right, to the profit zone to protect some kind of profit, just in case the market retraces. So another thing you want to do is you want to go to a much lower time frame, right? So once you're in profit, go to a much lower time frame. You can do 1 minute or even 5 minutes, right? So you clearly see the movement, right? So if there is any retracement backward that shows a low, you may want to enter again, right? So I mean, if this market retraces a little bit, just backwards, small, you may want to enter again. Or those that have not entered, that is the best time to enter. Then of course, any push to the downside again becomes your profit. So you're actually buying at a more premium prices. Okay. So I think that's for you, Mr. E. Thank you very much. I like that. So some of us want us to also do. Okay, let's look at US 100. Okay, so US 100 is also another good instrument that we can uh, look at right now. So this instrument is strongly on an upward trend, but it's only doing a retracement for now, right? So US 100 strongly on an upward trend, as you can see. Very powerful upward trend right here, right? The whole of last week was bullish. This week looking is also bullish, right? So, but right now the market is also nosediving, just the way we have it on GPJPY. So you want to jump in, right? Or you want to do some kind of scalping. So if you want to scalp, you go to a much lower time frame and look at for areas where you can be able to. So if there's a retracement, you place a trade, you put your stop loss and put your take profit. Okay. Okay, guys. Thank you very much. Let me stop it for now. It's past 9. So I believe you guys got enough value from it. I have dropped my phone number, so if you have questions, you can get. You can chat me up, right? Or you can equally call, right? Or you can call me on WhatsApp. Okay. WhatsApp call is best. Call me on WhatsApp, or you can chat me on WhatsApp. Guys, thank you very much. May the market be with you. Take notes. During the afternoon session, we're having a lot of movement in the market. That's the best time that you may want to jump in quick to the market, make money, and of course, make this year a good year for you. So we are actually having our business replication event, business replication, where you can be able to copy uh, professional traders, right? So if you're trading, you can actually fund on a separate account. You can let's say you have a particular account you're trading, you can have a second account. It's very possible, right? That second account would be copying professional traders, right? Professional traders that you have seen with their proven result, or you are seeing that they are making 10%, 20%, 30% weekly. You can copy their result. So as you're trading one side, your second account is making money. So that's one way you can replicate results of professionals. So we're having that event today in all of our branches, guys. So you can maybe come to the office, or you can equally reach out to your account officer. Your account officer will put you through, and of course, you start replicating trades of professionals. So, guys, thank you very much. Emmanuel Odogu signing out for now. Bye for now.